All right, let's jump into things. So, look, we'll sort of start off with gold here because really we saw obviously that big breakout into the end of last week and it's kind of hit our price target. That's fine. It's attempted to push through a couple of times and obviously just not quite at the moment sort of finding what it needs. Trying to sort of draw up some sort of little channel, but basically all this has really sort of provided us with is the fact that okay, it's come up and it's dribbled out the side of it all. So, when you get sort of channels that are really respected and really sort of, you know what I mean, that's the trigger for the break of it all. Generally, you'll see something and you'll see some fast moves, some sort of, it'll break, backtest, and then it'll really start to run along. Obviously, we've seen these sort of potential break back tests and that, depending on which one of these you want to be sort of working with, but they're not really sort of anything that's sort of like, okay, we break out, like this would technically be your break here. This is on a 1 hour, of course, but this is your break, this is your retest. This candle here, if this was to be what they were sort of trading off and this is what they were respecting, this candle here would have just continued and sort of people would have gone, look, this channel's broken. We've done the back test. Almost didn't quite, I suppose, put in the lower low, but it would have just sort of creamed down here a little bit. Obviously, we haven't seen that yet, so I don't really put too much stock on that at the moment. So for me, it's pretty much you can just draw a little range at the top up here. We've seen, look, buyers have had two shots to sort of pick this up at 76 or 77 and change. They've sort of held it up in this range here. I think it's very much sort of indecision at the moment. Look, we've got the major breakout, that's fine. So the question now is sort of like, do we sort of continue moving on with this after this little period of pretty much a consolidation at the highs that we're in at the moment? Or do we move to sort of do some sort of back test and then a move up to the top side over here? Now, we've got FOMC this week. That's the big one. We've also got lesser BOE, and also probably in between the two, the BOJ, as the two other sort of main central banks that are sort of coming out with their rate decisions this week. So yeah, there's a fair bit sort of going on. Obviously, talk of the town's been FOMC the whole way. So that's really sort of what I think the market's waiting to sort of see with some direction. And again, it's still just the same 25 base point, 50 base point sort of cut ideas. I've seen surety on both sides. Yep, everybody's pricing in 50. Yep, this bank's pricing in 25. So the fact that I'm seeing so much of the two sides of it all, I really do believe it's up in the air. I don't think they know how to sort of price this thing at the moment. Because it really could go two ways. Like we could see sort of like, the Fed playing some sort of catch up, going for the 50 base point. But you got to look for the people that are making these sort of predictions. You got to look at how they're positioned because, of course, they've got their thesis, they've got their ideas, and they're going to go, okay, well, yeah, they're basing it on whatever outcome they're predicting, and then they just sort of spew that out to everybody like it's the gospel. And it doesn't work like that. So, you need to consider both sides of the coin. You need to go, okay, look, you know what? There is an actual legitimate argument for a 50 basis point cut, but there's also arguments for why it won't have a 50 basis point cut, and obviously, i.e., then a 25 basis point cut. So you got to make up your own mind as to sort of which camp you're in. As I said a couple of times, I'm in that 25 base point camp. And I think that sort of 50 will send the wrong message to the markets and that. And I think it's too fast, too quick. So, I mean, the argument against that is people sort of saying that the Fed have been too slow and they need to play catch up. But, again, at what cost? You got, I think, some ridiculous amount, 50 days away from the elections and all this kind of thing. Are they going to sort of torpedo and nuke the markets prior to that? I know the Fed's supposed to be sort of a independent thing of the government, but I think that's just sticking your head in the sand. I don't know if that's actually necessarily the case. I mean, I'm sure that to some point they are, but I'm sure they could definitely be influenced as well. So yeah, it's really sort of up in the air as far as I'm concerned. So all we can do at the moment is trade the price action that's in front of us. So if we do get a break above this zone, look, we can see this, and this is why I see it shores it up. Like you got sellers here, you got sellers here, you got sellers here, you got sellers here. We want to see whoever's sort of up here, sort of taking their profit as soon as it pops out of this range. Who's holding it at this line here We want to see sort of a lack of those people there. So exactly like we saw on the high scales, and this is the thing that I go over time and time again. Price action and flows and these kind of things. It doesn't matter what time frame it's on. It is still the same thing. This is what people sort of like. They sort of go, "Oh no, I don't understand it," and so they do nothing basically. But the idea is here. You got sellers, 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 sellers. When you see that lack of sellers, bang, we move through. This is on a smaller time frame. This is on the 1 hour, same sort of thing. We got sellers, 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 sellers here. We want to see a lack of these sellers. We want to see a close out the top side of here. Will sort of give us again, nothing's guaranteed. You can always get up, move up here, and then come back straight back down, and it can be a complete fake out move. But it tips it more in your favor that if you do get a push out to the top side here, so close on, you would like to see probably at least a 4 hour, but even in this instance on this chart, you can see in a 1 hour may provide something to get that leg because we're only a couple of bucks off 2600, which is the next price target for myself anyway. And I'm sure a lot of other people would be looking at this, apart from the fact that, it's a measured move, which we've sort of shown a couple of times. It's also that big round number. So, I think there's a lot of people who go, yeah, hit 26, bang. And this could also provide a little bit of an overshoot because there's probably some people that are trying to short this thing, particularly the more that it sort of sits around here, and they may go, look, you know what, I'm happy to give it a little bit of a leeway, give it a bit of room to sort of like, break up here and then sort of come down like this. So they'd be having their stops sitting just above it, just so they think they're safe from it all. But of course, there'll be stops at, 2602, 26.6, 26.08. And the way these things can work is like, because obviously hitting a stop with a short means they have to buy back the position. That can then push things up, which then hits the next lot of stops, pushes that up, hits the next lot of stops, pushes that up, hits the next lot of stops. And this is when you can see things move quite quickly and quite sort of violently up to the top because it's just like stop, 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 stops. And these are automatic buy positions as people have their sort of their stop losses, their short stop losses hit basically. So in the short here and now, I still think 26 is due for a touch up, a little bit of a possible overshoot, and then we could sort of see and assess sort of what's going to be happening from there. As I said the other day, I do believe sort of we're probably getting close to some sort of medium term high top with gold. So, it could sort of still go up another 20, 30, 40 bucks and that, but I believe over the next week or two that there's a good chance that we sort of see a bit more of a substantial sort of pullback. But as I said, not to sort of say that it can't go up a little bit more before we do get that move. We're going to have to look for sort of times where it does this kind of pattern here, preferably on a 4 hour or a 1 hour above, where it holds sideways, 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 and then breaks and closes down to the downside. So generally with gold, like we did have that big sort of spike up last year, but generally with gold, when it's going to sort of do a reversal, it won't turn on a dime. You can see how many times it's been pushed up, pushed up, pushed up, pushed up here. You want to see this sort of setup happen, but then a close underneath this zone, and that will be our trigger to get short to sort of come back and target this 25.30. So I do believe this trade's coming. As to where it comes from, well, that's another story, and you guys got to wait to sort of see what happens. And particularly with FOMC, like that could be the driver and could push us all the way back up here, but it also equally could be the driver to push us right back down here to 25.30. So yeah, I know it's a little bit both sitting in both camps at the moment, but this is just literally just how the sort of price action and the flow is happening at the moment. It's not so clean cut, and this is why you're sort of getting so many calls. Well, maybe it's vice versa. With so many clean conflicting calls, you're not seeing easy trades present themselves. So all we can do at the moment is sort of look at where the sellers are, look at where the buyers are, and sort of try and trade those intraday sort of sessions and sort of say that, look, if we get a close under 74, say, I suppose we've got a little bit of a sort of support down here, under the 74, you're probably looking at 65. Now, I don't know if I'm game to short this because I do believe we're going up to 26. So if you're not game to short it and you see this little intraday pullback, well, then you're obviously looking for buy options to then sort of move up to the top side. So you wouldn't necessarily go, I mean, if you want to be game in that, you could short this and short it down to here, But really, I'd be sitting like these buyers held it sort of, back on Friday. I'd be sitting back down here with long orders to then try and capture this move. Because obviously, if this move does play out, as I said, my idea is theme is that we are going to sort of 2600. This move here obviously trumps this little short size move here. And as I said, look, there's a little support that comes through the middle here as well. This little section just here, which could also provide a lower support area. So, as I said, when it's gone up like this, there's a lot of areas where you could be sort of seeing layers of support for any potential pullbacks. So I don't know if it'd be game to necessarily short this leg here, but certainly if this breaks down underneath the sort of, the 70s, I'll be sort of waiting around these sort of high 60s to add to any sort of potentially long positions to move back up and really, as I said, get that sort of that test of 2600, which I do believe is sort of coming. So yeah, short here and now, a break above 91 or a break below 71. I mean, it's a $20 range, so it's a pretty broad sort of bit. But as I said, it's very choppy through here. There's no clear trade here. It's just, as you can see, it's just sideways. Every time it goes down, gets bought up. Every time it tries to push up, it's sold down. So yeah, I think the best thing is to do is just sort of wait for these levels to break, and then sort of look for our next moves, whether we're sort of going to be buying lower entries or whether we're going to be sort of like targeting that 2600 on a break above. All right, flip across. We got Aussie powering along and coming into this next zone here. And this is basically how we sort of planned it out the other day. Well, well, not exactly, because we said, okay, we sort of power on through here. But as I said, this is a level that we thought sellers were going to be sitting. Why is it? Because, we've seen sellers have been here. We've seen buyers have been here. Clear this up a little bit. Whoop. Clean this up a little bit. Sellers, 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 sellers. They really defended it hard coming here, coming along here. They were buyers. Coming over here, sellers. Right through here in that NFP trade, where it shot up and then just jammed right back down, sellers. So this is why we've got this little arrow here. The course of action obviously sort of went down before it went up, but the point is they're still the same. These aren't sort of levels in which we sort of have, they're not levels in which we sort of go, okay, time, they're not time constraints sort of ones, but they're levels where we expect the buyers and the sellers to be sitting. And, we can break through here. And this is what I was saying, going back to that video the other week, on the weekend, a breakthrough here and a pullback down here to find this is where the sellers were. You broke through. Now they've become buyers. Support, resistance. It's the same thing every single time. So what you look for here is obviously some sort of little reversal, sort of push back up through here after it makes a base. Look, it could just be doing this now, and we could find ourselves in a little range. As I said, we've got we've got FOMC coming up. Aussie's been on a big rip to the top side. There's an argument to sort of be made that this may be sort of like a little bit of an area. So a little bit. If you look at this, this is again, it's just only on the 1 hour, but this move through here, that is a pretty sort of clear cut sort of negative divergence. Look at the highs over here and how high this came compared to this previous high and this previous high. So that is a textbook, textbook negative divergence. So, what I mean, it stands to reason that you do see a little bit of a cooling through this area here. As long as you stay above sort of 67.19 for now, I think that sort of like, keeps all this still in play, really. Like, I'll flick on to DXY in a moment and we can see sort of US dollar sort of right into its heavy support zone. So the markets as a whole is sort of going, okay, yeah, let's give it a shot a little bit more from here. So, it's no surprise that we're seeing a sell down here. We knew the sellers were here. We marked out where the sellers would be, and that's where the sellers are. We marked out where the back test would be. That's where it happened. So what we're looking for now, obviously, is a break above this area here, above sort of 67.55. Then you've got the top wick, so 67.67. that's probably your next target, like to fill that wick. And then really, I think it's going to be a lot of sort of waiting game. This little one here, I'll call this. It's going to be wick fill, NFP wick fill. So a break above, this level here where we know the sellers are, so 53, 54, whatever in change. Moving up to fill that wick, it's only another sort of 15 points or so. And then above that, whether we sort of go up, we see some sort of, again, the same sort of pattern. We say we break up, we hit a level where we could expect the market to be sort of selling it, pushes back down, retest this level here where has been our sort of resistance, then we look to move up again. So that level would then take us up into 67, 80s. And then we're really back up into the thick of it because we know how heavy this area is, not only just from 2 weeks ago, but previously as well. This is why we've got it all marked out. So look, there's definitely still some upside here, but I think it needs to cool off a little bit. This RSI on the 1 hour doesn't look like it's super supportive for it all. Let's have a look here. Yeah, we can see, so it's just dribbling up along here. Look, I think, again, as I said, as long as it stays above 67.20 and that, I think it's okay. Really just a little bit of a cooling kind of period, maybe even a little bit of a sort of, as I marked out here, a little bit of a consolidation through this area, give yourself some buys back in 67.30s, and then sort of potentially look for that break to the top side to get out of here, to sort of be targeting first of all that NFP wick fill, and then the next one will be where we've seen the sellers here, is where we expect to see the sellers here. It's the same thing every day, day in, day out. So we'll sort of see how this one sort of plays out, but there's no sort of real rush on this. Where we at 10:43, might be starting to see a little bit of volume through in the next hour or so, and see things move a little bit. All right, DXY. As we can see, we know that this is the strong area. Like this is the area we've seen buyers. This is it. Oh, not that one. Arrows, buyers, buyers, buyers. These two red lines, if you recall, are from wicks from July and December 23. So these are very strong sort of lower levels. Basically, it's last line of defense, which we've seen, short up 1, 2, 3, coming into a fourth time right now, to sort of say that sort of like, this is where the market's happy to sort of draw the line at the moment and say, hey, look, you know what, give us the option, we'll buy it here. Not so much buy it here because obviously we're not seeing it really. I mean, look at the reactions off this line previously. This was a news-driven one. I don't remember what that was, NFP or something. I think that was. It must have been NFP. So, we're not sort of seeing it sort of fire back into the thing because, again, cuts are coming. Whether it's 25 base point or 50 base point, initial reaction with the cut is that you're going to see things sell off. So the currency is going to sell off. Now, you've got to sort of weigh in the other factors in that, and that's obviously the risk factor, how much of it's already priced in. And when you say priced in, I think this is something that people need clarification. Priced in is basically what is the market is already positioning itself for a certain reaction. That is what pricing in is. They're sort of going, look, I think that this is going to cut. And this is a good example. If we zoom all the way out here, cuts are coming, cuts are coming, cuts are coming, cuts are coming. And that's why it's been moving down like this. The market has been pricing in the cuts, which is basically positioning itself for these cuts to come. So you've got to be wary and shit that sort of like, the age-old sort of saying of buy the rumors, sell the news. You may get an initial sort of shoot down because that is the textbook response, particularly if they do a 50 base point cut. But if everybody's already been sort of getting rid of their US dollars and that in anticipation for this to happen, that might be a perfect sort of like bottoming opportunity for people to go, well, you know what, we've been sort of down, 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 down. All of a sudden, where does the risk trade come? The risk trade comes because sort of like people sort of wait. They go here, oh, it's cut 50 basis point. Well, that means we short. That's what the textbook says. Comes down here, people buy it up, and then they start to drive it back up over to the top side over here. So these are potential sort of outcomes for these things. So it doesn't guarantee that it's going to be the full demise of the US dollar, because remember, it's been on an incredible sell down for the last couple of weeks. You've also got these other sort of banks meeting as well, the central banks meeting as well. So, these things are also going to sort of factor into it. So they're not the only central bank cutting. I mean, the main one, obviously, Aussie is what I trade, and RBA aren't cutting, and they're sort of a bit more hawkish. So that, but Aussie's a weak currency, and also it's a risk currency. So, you know what I mean? It may sort of like retard the effects to it a little bit and not get as hammered as, say, the euro may. Um, but at the same time, if US dollars buying is happening across the board, then you're going to see Aussie sort of take a little bit of the brunt of that as well. So at the moment, we're down into the bottom side of this larger range that sort of we've been trading, and it's really defining the lines with these ones here. You're not seeing, like, you saw a little bit of a gap up this morning. It's actually left a couple of gaps recently. If you look at these ones here, this was the gap Monday morning. So we've still got the weekly gap that's open, which hasn't closed. And also we had a gap from Friday, which actually got back up to open level, which obviously wasn't the same as the closed level, which left that little gap there as well. And that never closed either. So, we're seeing sort of a pretty heavily oversold. Again, this is on the 4 hour now. So you look at the factors. Okay, it's in a big support area. It's oversold, looking to sort of push back up. It's got a couple of gaps open over here. We're probably most likely not going to see major breakouts prior to the news, prior to sort of the data. So it stands to reason that you might see the market try to value it and try to sort of go, okay, yep, look, I'll take a sort of position down here, because the risk reward for them is pretty good. If you sort of think about it, sort of like you're right at the very bottom on support where you've seen the market buy it up a number of times. It's not like you're buying here and looking for the break to move up over here. You're buying down here. You can put your stops just underneath this zone, and that really it adds liquidity to the move that may sort of push down to the bottom side. But really, it's sort of you know what I mean? It's a fairly low risk kind of trade if you want to sort of do this here. So I'm not surprised that you're seeing the market sort of give it a little bit of a buying interest around here. We've also got turnaround Tuesday. So, obviously we've been selling down DXY from Thursday last week. So there's Thursday, Friday, and Monday. It's pretty much just been in this straight sell-off mode, apart from this little sort of consolidation period through here. So I think there's a little bit of profit taking happening, a little bit of sort of like, maybe some sort of long positioning happening down here, but I don't think it's anything that's sort of really shocking. We saw a little bit of a gap up this morning, closed the gap straight away. Generally, if it closes the gap, straight away, you expect a bit of a push off and continuation in that direction. We can drag this fib down now a little bit further, and you can see that sort of like, if it comes back up, we got a little bit of a support through this area here, which is the bottom side of that little sort of consolidation range. This could provide a little bit of resistance. We got this medium term one that we've sort of like, picked out a number of times. This could as well. We've got this top over here. You know what I mean? It just really depends how much they want to sort of push this and squeeze this and that. But you know what I mean? I'm not sort of surprised that we saw a little bit of a push up and then potentially something along this line. So I wouldn't be surprised if we get something to this sort of effect. I don't see this as people sort of going, okay, let's really drive it all the way back up. Who knows? We could. You just got to see how the rest of the sort of session starts to play out. But I think at the moment, just let it sort of push up a little bit. Let it sort of get into these areas where we know there's been some buying previously. We expect to see some selling, and then sort of try and sort of jump onto these positions corresponding with that as that moves into those zones there. Again, for your sort of trade, it makes it a little bit more of a lower risk kind of thing than trying to buy the tops. All right, pop across. We got silver, and silver broke through. I actually didn't cover this, I think, over the weekend one, but we can see silver's come up through this area here. This is this little range back in July. It feels like ages ago, but it's only back in July here. It's obviously broken through. It's tried to do its little back test to hold it for a support, and it's really just dribbling along the top over here. So if we start to update these lines a little bit and sort of think, okay, Right? These short-term sellers, what are they doing? They're pushing it down like this. That might almost make a pretty good little channel here. So it starts to give us some little areas where we may be sort of seeing things if they do come down a little bit further. So, if you can get sort of, back into 30, 50, 30, 40, this kind of zone here, I wouldn't be surprised if we get a little bit of a push up from here. I mean, again, it's quite high up the thing, so it really depends how fast it does come down into it. But, there's a little sort of, this would be, again, this buy zone would only really be a intraday or intra-session kind of buy zone. Realistically, we know that this big yellow falling line was quite a sort of big resistance. So it could also be a back test down here, which could be an interesting area. Look, if we get back down to 30, I think I'll have a pretty good stab on it. Because remember, we got up over 31, and like again, you look at how big this move is. Like from this break over here, this was our little channel that we were first sort of working off, and we sort of bashing up against this a couple of times. As I said, like I actually put the chart up and I said, look, you know what I mean? I'm just looking for that little surge of volume, and it just charged up through here. So, I mean, it has been a big run, and if we sort of look from the bottom of this move, where we go now? So we take it from here up over to here. You know what I mean? We're way up in the top end of it all here. So let's take this other one off. So realistically, there's a lot of this buy zone's quite sort of I mean, I think you got to sort of be pretty sort of on the ball if you're going to try and grab this one. I think the better trade here would be this area here where we can see the selling happening. We can see a little bit of a congestion, and then potentially that to line up with a buy zone down over here. And remember, this is still within 23 to 38%. So it's right in the middle of that fib zone there. You could have a pullback here to the 38, which would potentially, again, depends how fast it comes. If it drops down like this, then it's not going to come into contact with this rising support. But these are the kind of areas that I'm going to be looking for. I do think we still have further upside, but as I said, while DXY is just holding the lows basically, I do see some potential short-term pullbacks, but I'm not game to short these things. I'm more, again, as I said, looking for buy options to then sort of move forward through to major breakouts. I think you got to respect the fact that if we get onto this 4-hour, you got to respect the fact that this was our sort of falling resistance here. There was another one that I had drawn here. So just one sec. No, look, I mean, that's even broken through there, depending how you like to sort of cut these things. I liked this lower cut here, and as you can see, the market was thinking about it at this zone because it had more touches, in my opinion. This one here really is just taking 1, 2 highs. That's it. And as you can see, markets kind of found resistance around here, but it's not really sort of respecting it so much. So I'm not a big fan of this chart here. But as I keep sort of saying, the fact that we've come through this big falling resistance, which we've sort of been setting up and respecting since May, I think that needs to be respected. So, I mean, maybe this first buy option here might be a little bit presumptuous. So I'm going to delete this one. But I think sort of, if you can hold this horizontal area here, this 30, 55 kind of thing, if you can hold this buy area here, then it just keeps on going with the show. But I think sort of if we do get a break below, say, 30.50, I'd be looking back at 30.10 for then a potential buy option at these previous highs for a back test to then sort of move back up in this sort of fashion. Bang, and then back up over here. And that would be sort of just under 31.50 for your targets there, which as we can see is around a 4% move from that level. Okay, copper. Copper charts very well. I mean, like almost to a T. I mean, this is exactly how we sort of said this is potentially going to be sort of playing out. Like this was the move through yesterday. And obviously I do the weekend videos, so it would have been charted at where we were about this level over here. And we've said, look, we're going to sort of come back up into the zone. Why? Because this is where we've seen the selling happening. You know what I mean? It's the same thing every time. This is the selling here, and we expect to see some selling again. And this is the thing. It comes back up, selling hits again. So, we've got to see, is this pullback going to come down to here and then have another run at it? I don't think this is going to be a top. I think the fact that it's made it back up here shows that, look, the buying is there. You just need to deplete the sellers at this level. So, while we sort of have a look for what to do here, we look at these lower levels here and we say, look, if we get a shot back here at 422, well, that gives us another sort of decent, 1,000 points or so. Is that 1,000 points? No, sorry, a couple of hundred points. No, 422, yeah, so it's 1,000 points back up to 33. 432. Yeah, anyway, you can see the levels down here. So, for the moment, be looking for sort of, again, a little bit of cooling. And this is the thing, when you do all these charts back to back to back, this is what you start to see. It's not like, generally, I mean, start that again. Sometimes you do see things running by themselves. But generally, you can see this stuff flowing all together. You can see, US dollar finding some buying, and what's happening at the same time. You're finding gold, you're finding copper, you're finding Aussie, finding resistance. But I mean, it all kind of moves in the thing. And this is why we put this price target up here, not only just because of this specific chart setup like this, but, there was a lot of support for the DXY in that area. There was resistance on a couple of other charts as well. So it stands to reason that sort of like, they're all going to be hitting resistance at the same time or thereabouts the same time. And the same with sort of, when they break. Generally, you won't just see one of them break, you'll see all of them break. So DXY breaks down, you're going to see the money and the flows. And this is the point, the money's got to be somewhere. And when it comes out of US dollar and you see US dollar sell off, that's why you see all these things generally break at once, because all that money is diversifying and going out into the market, and there's flows in all directions. That's the thing. Remember, like US dollar is typically it's the safe haven of choice. Well, JPY was for a long time, but obviously we know why it hasn't been for a long time. But USD is the sort of safe haven of choice. And it's sort of like, when people sort of want to get out of these things, they go to the US dollar, and that's why DXY will start to appreciate while you see all these things sort of sell off. But vice versa, that as well, as US dollar breaks those major supports, if that happens now, you're going to see these levels break. You're going to see gold break. You're going to see silver break high. You're going to see copper. You're going to see Aussie, and they'll all break out at the same time. And I don't cover euro or the pound so much, or New Zealand dollar, but they're all coming into very similar price setups as well, price patterns. So there's a lot sort of going on at the moment, but I think sort of, as I said, with FOMC coming up, you're going to see a lot of just this almost breaking but not quite pulling back. And that's why we could potentially find lower buying areas, because we're not going to see a massive rally on US dollar prior to this. Once the US dollar moves up a little bit, they're going to start selling into it. Once they start selling into it, they're going to start buying these products again, instruments, whatever you want to call it. And we got the China again, sort of back down, testing this lower level here. Just it can't get off its support, but again, it's got this little channel. It's tried to sort of pull away from it. It's broke out and it's back testing the top side. But I think that's almost like obsolete now. I think we're pretty much just into this little range here. Same sort of thing again. You see DXY break down, you're going to see this break down. You're going to see some major levels down at 7 get hit up. If US dollar just happens to find a big sort of buying push, well, you're going to see it across this cross here with the yuan. But the yuan, as we know, isn't a super fast mover. A lot of the time it finds these ranges and it can just grind like this for an extended period. That's why we sort of don't worry so much about this. But as you can see, it's down at the support area. You can see that the market has valued it at this area a couple of times. Same with DXY, they've valued it at these levels at a couple of times. So it stands to reason that while DXY is getting a little bit of a sniff, a little bit of buying pressure, whatever it is, whatever's sort of maintaining it, you're seeing it across the board here as well. It doesn't mean that we're automatically going back up over here, It just means for now, we're just consolidating at the sort of lows. The market's just stalling and thinking about it. So we've got to sort of wait to sort of see if we do get this break below here. If even if we do come back up here, I think it's just going to be a medium term high. I don't think there's really too much to sort of bring this back to life in that. Despite how sort of weak all the data and everything seems to be coming out of China at the moment, that is something certainly to sort of weigh up as well. All right, so that's it for the charts. We have a let's just refresh this on the news. So Asia again very quiet today. We got another China bank holiday. Japan must be back online today after their sort of little holiday. But as you can see, absolutely no news coming out through Asia. And then tonight we've got the CPI from Canada. So that's going to be a little bit of a mover. Retail sales in the US, that'll be a bit of a mover. But again, these are mainly things just to sort of hold them in position at the moment. They're not turnaround bits of data. I mean, Canada and US, so they'll get sort of a bit of a proxy flow. Same with like how Aussie and New Zealand do, Euro and Pound do. And retail sales could sort of give it a little bit of a, well, things aren't as bad, or maybe things are as bad as they say they are. So, yeah, we're just got to wait to sort of see how that one sort of plays out. But weak number on this one, I think will sort of really sort of give a good sort of push for it for the downside. And then, yeah, pushing through tomorrow. Look, the week is pretty quiet coming up until FOMC Thursday morning. So that's it from me. Yeah, anyway, that's it from me.